Hello and welcome everybody to the Housing Tips. It's a show where we talk about housing information, housing news, and everything in between. Today is some fantastic news that just came out from the Federal Reserve. And what is that big news, Jesse?
Crazy, man. The federal funds rate by 50 points. They cut the federal funds rate by 50 basis points. That's like the first cut since 2020. So it's bringing down rates to 4.75% to 5%, man.
That's crazy. That's something even I didn't predict. As our viewers know, we're always looking for different housing information, housing tips, all that good stuff in between. But something I didn't even predict. I did not predict a half point percentage rate drop. If anything, I was predicting a 0.25 rate drop. Some people were even predicting nothing would happen, but it finally happened. The quantitative easing is back and better than ever in the most crucial time. It always happens before election cycle. I find that very interesting. But yeah, in the first time in 4 years, the Federal Reserve actually dropped interest rates, and they dropped them quite significantly. And during the meeting, which something we'll put inside of the comments, we'll put inside the description, is not only did they talk about how they dropped it zero point 0.5 today, but they actually considered in the next 2 years to be back at 3.5% interest rates from the Federal Reserve. Now, I do know, and that's something I want to ask Jesse about and discuss, is the rates do not affect home loans right away. It's a cause and effect as it should be, but actually lowers the 10-year treasury yield. Then that gets transferred to the banks, and the banks from there can lower interest rates. But what are your thoughts about that, Jesse? And what do you think is going to happen in the future?
Yeah, it can be a little bit confusing because then people hear interest rates and they think, home rates. So the Fed only officially controls like the federal funds rate. And so that determines like the interest that's charged, like in overnight cash reserve transactions between banks. And so this rate cut does not directly affect, but high interest rates didn't help. Like it was making it harder for some home builders to get projects off the ground, especially like smaller private developers. And we have talked about that in the past because the
Shameless
rate,
plug. We'll put that in the comments below.
yeah, because the rates on loans that builders, get for acquisition, development, construction, that's closely tied to the rate set by the Fed. So we're thinking that this rate cut should make it easier for those developers to get building again, and for us to see more housing.
Oh, and I agree. And I think what's going to be more dramatic of a shift as well is all of the people that were sitting on the sidelines, whether they were looking to sell their house or whether they're looking to purchase a new house, they were sitting on the sidelines because a lot of people that own properties currently are underneath 3, 4, 5% loans. And there's just no way for them to move into a 3 to 4, 5% loan into a 6 or 7% loan. So it will be interesting to see. Maybe that's starting to become the time where the people that had smaller houses, people that had maybe condos or first time homes, they're thinking about maybe it's time to sell the house, time to upgrade, buy something bigger, buy something larger. But it's fantastic news. But it does come with a little bit of cons. And one of the biggest cons is high yield savings accounts. Their savings rate will drop. And over time, if their goal is 3.5%, you will see your high yield savings account, that percentage of yield that you're getting on your money start to diminish and start to go down. But that's just one thing that I've thought about. And I know there are some cons about it, but the stock market will get better. The, credit card rates, especially people that are suffering with credit card debt right now, it is a sign of relief. As the interest rates come down, it'll lower the APR and credit cards. And it doesn't correlate exactly with mortgage rates. It's more of a domino effect, and over time, it'll start affecting it. But it's great to see that there's actually something being done. The interest rates are lowering a little bit, but fantastic news. And anything else that you want to talk about, Jesse, before we close out this video?
No, yeah, I mean, just excited to see this change, in our economy, right? So, like you said, high yield savings account, we're gonna see that kind of quickly fall, and so with the stock market, we're gonna see money that gets pulled away from those money market accounts and investors are going to search, for more of those enticing returns. Credit card rates had been at like the highest. I think average is like about 23%. So that's going to be a huge relief, with individuals with balances and on their credit cards. So hoping to see, you know, people feeling this relief and then kind of entering the market and looking to see, adjustments and changes that they can do. I think it's really going to help.
Yeah, it's fantastic news all the way around. It also means too that we're actually winning the battle against inflation. Inflation's coming down to a more moderate level, something sustainable instead of the 9 or 10% it was before last year, 2, 3 years ago. But it's fantastic news all the way around. If any of this information sounds of interest to you and you would like to learn more about it, learn more about anything that we speak about, then consider liking this video and subscribing. But until next time, thank you so much for checking out this video and have a great day.